I really think that Powell's going to just keep raising interest rates until something breaks further. And I do think that at the end, I believe in the extra pyramid that the dollar will go up, and at the same time, gold will be going up. And gold will be going up a greater percentage than the dollar. I also think that we could see 30 or more for silver by the end of the year. And I'm not alone there. Some of the mainstream financial press are saying the same thing. I've seen when the mainstream starts giving out hints like they've been doing, they're usually setting up their, let's say, brethren for a move. And it's interesting because we're not seeing any move of silver into the ETFs. It's coming out. Why is that? That's a very important question.
In a recent episode of the monthly wrap-up hosted by Craig Hemke, renowned guest David Morgan delved into the intriguing dynamics of the silver market, particularly focusing on its recent performance during the summer months. During their discussion, several key points emerged that shed light on the current state of the silver market and its potential future trends. Silver had experienced a noteworthy fluctuation, with its price now resting above $23, a 4% decline from the recent high of $25 recorded just last week. In comparison, gold also saw a minor dip, standing nearly $1,940, a 0.5% decrease from its recent high of $1,950. Morgan, offering his expert insights, expressed optimism about the future of silver's price. He suggested a possible increase to $30 or more per ounce by the end of the year, predicting that gold might also see a rise, potentially outpacing the growth of the dollar. Just before you watch David Morgan's interview and latest market trends, make sure to subscribe to our channel and give this video a big thumbs up. Morgan underscores that the primary factor influencing silver prices in the coming years would be monetary demand. The physical investment in silver is projected to decline by 16% year-on-year compared to the record high of 352 million ounces in 2022. Nonetheless, this year's forecasted figure of 295 million ounces would still be the third highest total on record.
Well, I think there's an ongoing catalyst, and then there's let's say, so there's a chronic condition and let's say an acute condition. I think most people are familiar with those words. So the chronic condition is that the silver supply is continually being eaten away by industry. And that's kind of in the background, but it was 35% of the market 2 decades ago. Now it's 55% of the market today. And 2 decades ago, the above ground annual mining supply was about 550 million ounces. And today it's 850 million ounces. So do the math. We're at a 55% offtake of 850 million ounces today, and 2 decades ago, 35% of 550 million ounces. So those are big, big changes over 2 decades. So that's just something subtle that goes on and on. It's like a stock buyback program that never ends. Secondly, acute. Well, what is it? Well, Jim Paplava from Financial Sense, I don't know if I say another name on there, but I'll say it. He wrote an article called Silver Waiting for a Catalyst. What is the catalyst? Well, it could be the fact that people recognize that we are in what Jim Dines would call a natural corner. The Hunts tried to corner the silver market. Maybe yes, maybe no, but that was man. Bankers in the past have tried to corner the silver market. But this is a financial way to do it. But if you are industry and it's price inelastic and you are building solar panels, or you're Tesla, or you're 3M, or you're Dow Chemical, or you're one of those entities that requires silver, or you're out of business, you really don't care what the silver price is. You're going to buy it at any price. If that coincides or happens around the same time that we have another financial acute situation, more bank failures, name it, people wake up. Let's say another 1% of the population realizes that silver is a store of value, store of wealth, and has more value than gold from the aspect it's more utilized. Then that could be an acute input. A lot of it has to do with greed and fear. I think it'll be monetary demand. That's the variable. And that's what we've seen. We've seen from silver squeeze, the inventory of registered was like 150 million ounces, and now we're bouncing around 30. I know that a bunch was moved recently from JPM's eligible category back into the registered. But that's, to me, that signs of desperation. I mean, especially if it has to come out of the stockpile that's transparent. If it came out of nowhere, which it has in the past, and what I mean by nowhere, what I mean is the registered category went up 10 million ounces and the eligible didn't change. So we knew it came out of somewhere else. That's not true now. I really think the supply is getting tighter and tighter. And I made that statement at a conference in London years ago. And I don't know if I was the catalyst or not, but what I do know is the market took off thereafter, and it really, really went. That's when we saw that spike high I just described. So did I have something to do with it? Maybe, maybe not. I don't want to take credit for anything that can't be substantiated. But what I do want to say is, if one person known to be fairly knowledgeable in one market that's as small as the silver market, that could be a catalyst.
Morgan points out a concerning trend of diminishing physical silver supplies across various exchanges like COMEX, LBMA, and SLV. Michael posted recently in his tweet that COMEX-eligible silver had declined by over 1.5 million ounces, reaching its lowest level since September 2020, while registered silver increased by more than 1.65 million ounces. Additionally, a recent report from LBMA acknowledged the silver squeeze phenomenon and raised concerns about the potential shortage of supply faced by London ETFs. Morgan believes that if silver's price surpasses a threshold, possibly around $30, it could swiftly gain momentum, leading to increased demand for silver mining stocks. He referenced the late 1970s when certain silver mining companies experienced remarkable profits. For example, Lion Mines, initially trading at a mere 7 cents per share in 1976, soared to an astonishing $380 per share by 1980. This historical context emphasizes the potential for substantial gains in the silver market, underscoring the need to closely track supply trends and price dynamics. Let's get back to the interview.
August is almost always a low for gold. And the algorithms, of course, have run things for a very long time. What I think is the most interesting this month is that we've seen a very big shift in the commitment of traders reports. And I don't hang my hat on the commitment of traders exclusively, but certainly it is something to pay attention to. And now with the commercials being more or less net long or close to it, that indicates that there's a setup here for a potential short squeeze. I've looked at it. I don't look at it daily, Craig, anymore, but what I've looked at on more or less a weekly basis is that I think it's mostly short covering right now. I don't see a lot of new buying. If you look at the wholesalers, which I have a direct line to, not all of them, but a lot of them, they're loaded with metal right now. And from Sprott Money that the premiums have come down and all that. Doesn't mean to give up on the silver market or anything close to it. We would expect this in August, but I do think there's a lot that's going to happen between now and the end of the year because we've seen such a drain off in the physical supply of the COMEX, the LBMA, and what's going on with the SLV. The SLV is losing metal as well. And the short position, there isn't enough stock left for anybody to short the SLV. So there's a lot behind the scenes, as I've said, ad infinitum, that people don't see, but people like you and I that have been in this market for so long we can see it, or at least get a glimpse of it, and we can also feel it, because it feels to me like there's that little rumble that happens before the big eruption. Silver, cobalt, gold, uranium, we look at all the resource sectors, but right now we're loaded pretty much into precious metals. We have a couple uranium picks and one technology stock, and that's it. But it is at the lowest it's been since the Barron's Gold Index started, whatever it was. And you get leverage in the stocks. But right now, the delta, the change between the two is, as I think it was a Happy Hawaiian posted what you just outlined. It could be a situation, I think it will be a situation where once the catalyst, whatever it is, starts, and we start really moving above 30 in a substantive way, we could go parabolic pretty quickly. That's typical of silver. And in those scenarios, people that have owned silver or are thinking of owning silver might just say, hey, I'm missing the boat, but it's not too late. There's these silver stocks that are only 12 cents.
Yeah.
Silver stocks that are below $1. And I witnessed this in 1980, late 79. Anything with gold or silver in its name shot up. And there could be a couple reasons this time. One is you phone up your local dealer and you say, hey, I want to buy, $10,000 worth of silver. And the coin operator says, that's fine. The waiting list is 8 weeks right now. And you go, wait a minute, 8 weeks? Boy, this market's really tight. Pause, check that. I'm not going to make the order, cancel it. I'm going into the stock market. In other words, if you couldn't get silver over the counter, what's the next best thing? The mining shares.
Yeah.
And there's a lot of people that have an E-Trade, Scottrade, Ameritrade. I try to name them all because I'm not biased to any of them, but they got their own trading platform. They got $2,000 in it, 20 grand in it, 200,000 in it, 2 million in it. I don't care. The point is, everyone's got access to a mouse and they can buy XYZ mining. So I think the run to gold, the run to silver will be so phenomenal this time because it'll be worldwide, not just the United States and a few Arabs. It'll be everybody panicking into the metal, and any form, be it silver, physical, ETFs, private placements, junior miners, mid-tier miners, top-tier miners, you name it. And I want to digress just one more time, and that is, can you outperform with the stocks?
Morgan also emphasizes the persistent influence of industrial demand on the silver market. Projections suggest a 6% price increase in 2023 due to sustained high demand, followed by a 4% decrease the following year. Notably, an acute catalyst for price surges could arise from industries, especially during financial crises, heightening awareness of silver's value. Monthly data revealed a substantial 382% increase in silver sourcing, with related categories such as electronic components, solar energy equipment, and electric vehicles also experiencing robust year-over-year growth. These insights into the silver market's current state and potential future trends, what strategies or considerations do you think investors and traders should keep in mind when navigating the silver market in the coming months? Share your thoughts in the comment section. If the video resonated with you, make sure to join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.